Okay, good afternoon, and this is the International Arbitrage on the 15th of February 2024. And today we're going to talk about owner managers of SMEs raising funds in the US. This is non-US businesses or non-US persons who are own and operate their own business. It is outside of the US, but you guys want to, and many of you, quite a lot of you, want to raise money in the US from US investors because the US market is quite dynamic, especially for investments and raising money and what have you. The reality is that the environment in the US for raising money is regulated. That means there are a number of laws that apply and govern people that want to raise money in the US. It's not like some countries where you can get friends, people that are willing to introduce you to investors on the basis of them earning a commission. That type of thing is not legal in the US, so you won't be able to raise money that way in the US. In the US, you have to be first. So, if you are a small, medium-sized business and you are getting together with you only need a small number of investors, 10, 20 investors, you might use something called, you might set up in the US, which is something which is called a private investment fund. Private investment fund means it's a relatively small number of investors, and the type of structure that you would use, or one of the structures that you could use for that, is a limited partnership company, and then there's a general partner company that manages the affairs of the of the limited partnership company. The investors into the limited partnership are limited partners, essentially. So the point we want to deal with here today is that owner operators, you are the owner of your business, or it may be a family business that you own and that you work in. Businesses of that side have a particular set of needs and requirements when it comes to raising money. And because you're not a US business and you're based outside of the United States, many investors, US investors, are going to see your business as a high risk, especially when it comes to the case of investment. So if you're asking US investors to invest in your business, which is based outside of the US, it's a small business run by a family, run by an owner operator, which is a main person who is running the business, then essentially that investment is going to be seen as a risky investment, a much higher risk investment by US investors, especially if the business is based outside of the US. So part of the way that you reduce the risk that investors are seeing and not let them ask the question, why should I invest outside of the US when I could invest and get the similar returns or more investor protection in the US? What you have to do is you set up a private investment fund in the US. But in the US, when you're raising less than $150 million or you're raising less than $100 million, quite often there are a lot of exemptions from regulation, which means you don't have to have what is called a regulated fund manager. But this is not necessarily a good thing because US investors want protection of regulation. They want to see that their investment is protected by the laws of the United States. And so therefore, what they're going to do is, if you're not regulated, they're going to see that as very high risk. And so one way of dealing with this is hiring a fund manager in the US that is regulated, and that would be what is described as a US SEC registered investment advisor. That would be an SEC regulated fund manager that you would hire to provide investment management services to your business. And when you hire a regulated investment advisor, fund manager for your private investment fund, your private investment fund is therefore de facto regulated. because the fund manager has a number of obligations in terms of things like due diligence, anti-money laundering laws. They have fiduciary duties to the investors of the limited partnership company. And so therefore, what that means is they are protected. Now, there are thousands of registered investment advisors in the United States of America. Some are large institutions with thousands of people and employees that manage billions of dollars. Some are small, owner-operated businesses. They're run and owned by an individual, a family, or a small number of people. International owner-operators who are raising money in the US, you guys need to get or look for an SEC registered investment advisor that is owner-operated. Because hiring a large institution, even if you can convince them to take on your transaction, which is issuing and selling securities to investors in the US, even if you can get them to take it on, dealing with large institutions is very difficult. Large institutions in the United States are doing transactions hundreds of millions, sometimes billions of dollars. Your transaction, which may be 10, 20, $30 million, is actually quite small. And in a lot of cases, it's not even profitable for a large financial institution. But I have seen people strive to engage large firms because of their brand, because of their reliability, and of course the trustworthiness and the reputation, all these things. But of course, when it comes to solving problems, when it comes to, of course, if you're working with a large financial institution, you're not going to get anywhere near the owner of that institution. Is probably listed and owned by thousands of investors anyway. You're not going to get personal time with the CEO. You're not going to be able to explain why the compliance department in the large financial institution just doesn't understand your business and the way it works and how things have to be done, and they're therefore making it look risky when it actually isn't. But it's risky to them because they don't understand it. If you work with a small registered investment advisor that is owner operated like your business is, you will be able to establish a relationship with the owner, or you will be, at the very least, you will be able to get in to see the owner, to explain your case, have some communication with them, and it's much more likely that you will have a successful working relationship with an owner-operated registered investment advisor rather than a large financial institution. The other key thing you have to do is you have to make sure that the registered investment advisor that you choose has international DNA, which means they are used to dealing with non-US businesses that are raising money in the United States of America. It's a different set of requirements. It's a different type of due diligence that needs to be done. There are different anti-money laundering concerns that have to be taken into account. And it is important that they understand and know. They're experts, of course, in US securities laws, but there are US securities laws that apply to the US domestic companies, and then the way the US securities laws work with international companies that are raising money in the US from US investors is different. So these are two key things that you guys need to look for when you're raising money and you're trying to get a regulated investment manager, fund manager for your private investment fund when you're raising money in the US. Okay? Do your research, call who you have to call, do your research, and basically that's it. Cheers for now.